Greetings, members, one and all of the Salivation Nation. Both Wall Street and Main Street expect gold to continue climbing. Let's explore! Yes, we're taking a look at the markets here as they are winding down the week. It has been a fascinating ride this week, with especially yesterday with a little bit of a dip in gold and silver prices, but a huge tumble for the stock market. It was a pretty bad day yesterday. There's been some recovery today on this Friday, but nonetheless, gold is up slightly, and many expect it to continue to rise. And this article here that has basically a survey that is done through Kitco. This is Alan Sky Sikora, and they do this every once in a while. I think it's fascinating to kind of get the pulse of where people think gold prices are going. In fact, I'm going to have a little poll in this video, and you can vote in the upper right-hand corner where the I is. And I'd be curious to see what you think and where gold is going in the next moments here or through the end of the year here. So this is a precious metal survey that was done, and they say that it's going to continue their recovery in the week ahead. The precious metal sold off sharply at the end of last week when a stronger than forecast report on U.S. non-farm payrolls led to improved optimism about the economy. However, the metal rose sharply this week as buying emerged on the price dip and accelerated around midweek when equities corrected sharply lower, and the Federal Open Market Committee policymakers indicated that they don't envision hiking interest rates any earlier than 2022. Of the 14 Wall Street professionals who took part in this week's survey, none predicted gold would fall next week. 10, or 71%, called for higher prices, while 4 respondents, or 29%, were either neutral or said they expect a sideways market. A total of 1,285 votes were cast in the online Main Street poll. Of these, 792 respondents, or 62%, looked for gold to rise in the next week. Another 308, or 24%, said lower, while 185, or 14%, were neutral. Now, for this survey, we're going to stretch it out through the end of the year. And I want to see through the range of prices that you think that gold will be through the end of the year there. Now, they didn't say what the prices would be, but we're going to gauge that in our survey. They just wanted to know if they're going to go up or down. So here we can see the graph of the survey. So Wall Street is bullish by 71%. Nobody was bearish on Wall Street, and 29% were neutral. So that they basically didn't want to take part. They don't know where it's going to go. Main Street's a little bit different, but still, an overwhelming majority think it's bullish, and bearish 24%, and then neutral was 14%. In the last survey for the current trading week now winding down, Wall Street leaned bearish while Main Street was bullish. Around 11 a.m. Eastern Time on Friday, COMEX August gold was $64.50 higher for the week so far to $1,747.50. I think it will be slightly higher, although it will be a struggle to get over that 18 handle, said Bob Habercorn, senior commodities broker with RJO Futures. Sean Lusk, co-director of commercial hedging with Walsh Trading, said gold will be definitely up for as long as the Federal Reserve keeps pumping money into the economy. There's no sign of that slowing down. They're going to stimulate the economy the best way they can through bond buying and other quantitative easing measures until that gets unwound. Why would you be short in metals? Lusk asked rhetorically. And I will say, too, that I heard another statement this week that the Federal Reserve has a myriad of different tools to use. Well, those tools are essentially dollars, and they can pump as many of those out as they want. and they will be without fear of reprisal as long as they do it in a way that seems to not affect inflation as much as many of us fear. They can only do that for so long, though, before it comes back to bite them. But they're apparently not worried about that anytime soon. He cautions that there will be bouts of selling in the form of trader booking profits. However, he also looks for some market participants to use price dips as buying opportunities. I did that last week here. I'm going to vote for up again, says Phil Flynn, senior market analyst at the Price Futures Group, commenting that the fundamental backdrop appears favorable with reports that physical demand is picking up in the number one consuming nation of China, and monetary policy around the world remains accommodative. With the Fed's announcement that they're going to keep interest rates low until 2020, eventually it's going to propel higher gold, Flynn said. Jim Wyckoff, senior technical analyst with Kitco, also sees more upside potential in gold. Bulls have had a good week, and the charts remain overall bullish, meaning the path of least resistance for prices to remain sideways to higher, Wyckoff said. Charles Nidos, senior market strategist with LaSalle Futures Group, looks to gold to test resistance around $1,760 area. We were able to pull into a positive week, he said. We are trading above all the moving averages. Philip Streibel, chief market analyst strategist for Blue Line Futures, said he is neutral to bullish, optimistic about gold's fortunes, but at the same time pointing out that the market has been unable to generate momentum above chart resistant levels. Remember, at the beginning of the year, many of the folks were predicting $2,000 gold by the end of the year. And we'll see. I want to be optimistic and say gold should go up and the stock market is going to go down. People are going to look for the safety and gold will break to the upside, Streibel said. But in reality, though, it's every time we get to this spot on gold, it does nothing but disappoint me. Since Memorial Day, gold has put in several daily highs in the 1750s and the low 1760s, but has not generated further upside momentum. I want to be bullish, but we've got to prove ourselves, Streibel said in the chart pattern. We've got to get through some of these next levels. It's like silver. It gets to 19, then it goes down. So it seems like there's a smackdown point, when I call it, to use a wrestling term. And it might be 1760 for gold and $18 it seems like for silver, more than $19. Mark Leibold also expressed caution despite a decline in the U.S. dollar. He noted that precious metal shares are losing momentum. However, Leibold also said he thinks it's temporary but favors waiting for renewal by signal. Kevin Grady, president of Phoenix Futures and Options LLC, said he is neutral for next week, although he has also commented that massive stimulus will provide a floor under gold prices on any sell-offs. The Fed's comments about keeping interest rate at current levels until 2022 was also positive for gold, Grady continued. The sharp sell-offs are keeping some longs out of the market. However, we will see this through the open interest into the active August contract, which is currently 338,000. I do not consider this to be a very robust number. Colin Ciesinski, chief market strategist for SIA Wealth Management, has yet another neutral survey respondent, commenting that gold remains in a sideways trend between 1670 and 1750 an ounce. News flow has gone quiet into the quarter and volatility has dropped off for now, he added. Adrian Day, chairman and executive officer at Adrian Day Asset Management, suggested prices may not change much next week. Gold has been overdue for a pullback, but it's difficult to think that the modest decline at the beginning of the month was all we were getting, he said. Gold will react to the Fed, to the stock market, and other factors, but a correction is still possible. We say unchanged for the week ahead. And that's a pretty, I think, a realistic approach, because it does seem like many people were expecting this yellow metal to pull back, and it has been kind of overvalued for some think. Others think it's not overvalued. In fact, obviously, the vast majority of people and those respondents do think it's not undervalued at all. And that's where this survey comes in. Again, at the upper right-hand corner, very curious to see what you think about where gold will be. A fascinating metal indeed, and its luster, it doesn't react to anything except the price. Reacts greatly to the strategy or to the markets emotionally. Emotion ties in a lot of it, and we're seeing some of that, in the past couple of weeks here. Very, very fascinating indeed. Gold, an amazing metal to behold, and I want to know what you think of where gold is going to be at the end of the year, and price level, and we'll gauge from that whether or not this community is bullish or bearish on the yellow metal out there. For me, I am bullish, but I'm not going to tell you where I think it's going to be. I'm going to stand with my prediction from videos past, but I'm not going to reveal that in this video because I don't want to upset the apple cart. Not that anybody is driving an apple cart or has even seen an apple cart. Has anybody seen an apple cart in recent history? I've not. But either way, we don't want to upset it, and I don't want to upset you. I hope you enjoyed this video. Let me know what you think below, and let me know what you think above. In the upper right-hand corner with the survey, I'd like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate. Yes, press that thumbs up. Press it gently, or a thumbs down button. Comment. Share, yes, please share this among all the multimedia platforms that are out there, or social media platforms out there. And subscribe.